everyone. Let me just change up my... This one there. Can you hear me okay now? The microphone's back in the camera, so let's just... Obviously, something's gone wrong with my very expensive microphone. Hope you're well. It's Monday. Final week of January is finally here. Thank heavens. I don't know about you, but it seems to have gone on forever and ever, January, doesn't it? Let me just make myself a bit smaller. There we are. So not a great deal of data today. We've had the IFO from Germany. Business climate, that's a sentiment indicator out of Germany, weaker than expected. 87.6, so it stayed the same this month as it did last month, 87.6. It was expected to tick up a wee bit. Main US data today is the durable goods orders. They're with us in 7 minutes. Remember, they've been delayed because of the government shutdown. 1.1% previously. That was revised down from 0.2%, expected to tick up to 3.3 of 1%, and the wider durable goods 3.1% from a negative 2.2% last time. Remember these, as it says here in the good old Forex factory, delayed by 33 days due to the government shutdown. And if we look at, we just use the durable as an example, we can see they've been fairly miserable post-COVID. So what does that mean? Durable goods, remembers, these are month-on-month figures. Let's just go back to 2022. These are durable, let's just take it, go the other way. Take it back pre. Sorry, I've gone back far too far. So I want to take it back to pre-COVID. There we are. So and bring us all the way forward and back to 2021. There we are. No, I don't want it there. Where I want it. There we are. So you can see improvement. These are, remember, durable goods are stuff that hangs around for a while. So things like printed circuit boards, cars. Actually, not including durable goods. Actually, not correct, cars, but stuff that doesn't deteriorate. Unlike fresh produce, stuff with a sell-by date that runs out. So durable goods orders expected a bit better than last time. We take the forecasts off. We'll see what the January data looks like, but it's been quite spiky. It's been ticking up over the last 6 months. But expect a bit of a lull in January. Huge ice storm in northeastern the United States over the weekend as well. That's causing problems. Obviously, the horrific situation in Minneapolis and the killing of that ICU nurse. Things, yeah. Anyway, obviously, political shenanigans just adding to the divide within the United States and within many countries, but. As far as the markets are concerned, it's shrugging all that sort of negative news off. Let me just open up my TradeLocker platform. We had a update yesterday, and it's gone to sleep. There we are. So apply that. So let me just get rid of the Marquise. Let's get rid of that, and let's just move to, so you can see all of the chart. Let's just move to the sideways one. There we are. Big news over the weekend. I'm sure you're all aware if you've been trading, was the move on the yen. Comments from the Prime Minister about the word intervention was used. And so we had a big move for the yen. We saw it on Friday kicking off. Let's just use the dollar yen as an example. I was putting the yen crosses. But you can see here on the DAX gapped lower. This is the index, the 5-minute chart for the DAX. Let's use this as an example, actually. We opened, we came crashing down on open, but we've recovered and we're back to where we closed on Friday here in Europe on the DAX. But if you look at the dollar yen, for instance, we opened. So this is Friday afternoon. Sorry. Friday afternoon to around the European close. The London fix, remember, 4 o'clock London time is the London fix. It's a key time for Forex trading. And dollar yen started to improve then. We then gapped at the close in the United States on Friday. We went even lower and we closed at 154.46. And then the news overnight, more chatter out of Tokyo, has taken dollar yen to 153.35 this morning here in mid-morning European trades here this Monday. So we've recovered a tad to 154, but a huge move from Fridays. We just look at the daily chart. You see how we've tanked on Friday and then gapped on open this morning. So gap traders will be looking at that gap. You can see where we closed 155.70. And as I said earlier, we've been as low as 153.30 so far today. Here on the end of day chart, you can see this December 17th, December 16th end of day low, which took us to 154.50 basically. And that's where we opened this morning. You can see, sorry, that's where we opened this morning, the low of that December low. So yen getting a bid. How much further it's got to run, we shall see. How much intervention comes from the actual Bank of Japan is clearly no. This is just chatter. Whether there's actually, well, again, we won't know till later on in a couple of weeks how much intervention's actually taken place from the Bank of Japan, if indeed any, because obviously this is very, very late in the session. However, what that also suggests to me, and again, that's been reported quite widely this morning, is that this is also the selling of the dollar, not only the buying of the yen, but selling of the dollar as well. Certainly here on close last Friday. Remember, it's the end of the week as well. So dollar selling there. If we look at some of the other yen crosses, very, very similar patterns. Exaggerated move here against the euro. We got as high as at 1.186 on Friday, and that's you can see the extended volatility on Friday's open, and then we went down there on the European close there at 5 o'clock night time, and then we've just tanked lower again and again, recovered a wee bit. So euro 181.80 was touched. The guppy sterling against the yen 210 at the moment, but we had been as high as 214 and as low as 209. So again, big moves, big gaps, all interesting positions. And again, see the volatility we saw on the open on Friday, took us to the low, really, of the close on European trading. That was always a sign that some significant moving's going on. And again, it could be selling of sterling, but certainly the yen has lifted on expectations of a intervention, but it might be just short covering. Remember, the market is very, very crowded, short yen, so we'll see how that's coming out. But that's obviously had an impact elsewhere. The Nikkei this morning, there's a Nikkei here, 52. 600 at the moment, this derivative market, but again, here's Friday's close around about 52,800, and we opened at 52.6, went as low as 52,100 on this morning. We've recovered, but we're back to where we opened really on Friday. So opened this morning at 52,600. So stocks lower, yen stronger, and that's rippling through Asian markets as well. Big move in South Korea. We don't offer it here, but big moves in South Korean won this morning as well. So anyway, let's have a quick look back at the data. Might have dropped now. So we're pending. Oh, there we are. Much, much better. Lots to shout about there from the administration. 0.5% for the core reading. Much, much better than expected. Was expected to be 0.3. Significantly better than last reading. Remember, it's 33 days delayed, so things may have improved or deteriorated since then, but a big jump in the headline number, 5.3%. That'll be grabbing Monday's financial headlines, given there's not a lot going on. Excuse me, I need to blow my nose, so just wipe my nose at least. Excuse me. So there we go. See how that's impacted the dollar in a minute. So let's just pull that away. We'll come back to that in a minute. And let's go to the actually, let's just see how the stock markets are reacting. So there's the hourly chart. Look at the DAX, Nasdaq on the 5-minute hasn't really reacted yet to that durable goods orders, but again, moved lower in the early session, and we've been recovering here over the last hour or so. So 10 o'clock, it's actually a couple of hours, isn't it? It's a 5-minute time frame. We had a look at the hourly, didn't we? It was very, very choppy. There's the open last night, and we've been recovering basically. So we're sort of flattening here on the hourly chart in the upper half of the Bollinger Band. So we ticked high for the last 3 or 4 hours, despite that big sell-off at 9 o'clock, as all the European traders were in and running, but above where we were when Trump started speaking last week. So 25,500, the Forex market is likely to be more volatile. Dollar 118.47. So again, a weak dollar on Friday. Right up here, we went to 118.90, went to 119 basically to the upside. I'm going to put that in as well now. So obviously then that brings in the key, obviously here on the hourly chart of where we're, but 120. Many institutions, analysts have 120 as a target to the upside for the euro, 121 some later on this year. So 118.50 we hold at the moment. So weaker dollar, that story continues. Dollar CAD 137. Up from this morning's low at 136.70. Aussie's had a real old run, up over 69 now. .69's been breached on the open this morning. We got to 69.35. That obviously brings in 70. We just take the Aussie as an example. We take this up to the 4-hour chart. Big old strong trend. Just stay on board, my friends. Go to the daily. Look to the left. Where are we now? Gap on open this morning. 60.69's been breached. And again, we zoom this in. You have to go up to our weekly chart to see when we were last this high. And it takes us all the way back to this week. We talked about last week, the end of September 2024, when we topped at 169.25 for both those weeks. The actual high in that 2-week rally was 69.40. So that's the next potential upside target or resistance zone. First one's there because that's a weekly top, and that's where we've run to so far today. So key resistance at 69.10. Perhaps some sellers in place, but monster week last week, as you can see on that huge candle. Understandably, there's a bit of resistance, but the gap on open will probably get filled this week. So that might be one to look a bit of move to the downside. Obviously, we've got some key Aussie data. We've got the Fed. We've got loads of earnings this week. So lots going on, but just using the Aussie as an example against the weaker dollar, this is a weekly trend. It's been running for a while. And last year's best performer, Swiss franc, in demand again today. Safe havens getting bid. We'll come to the gold and the silver market in a minute. But again, see last week's monster move down, rejecting the key 80 level. Last 3 weeks, we'd had that 3-week dollar rally and completely engulfed last week as we moved down, and then more weakness as we've gapped lower. 77.84 currently for the Swiss franc. And obviously that's the weekly candle. It's just starting, so we can't read anything into that. But if we look at the hourly candle today, there's the gap on open, and we're back to where we opened late last night, 77.84. So the trend, we go back up to the daily, is very much down, and it's quite a significant, big old parabolic move down. So again, looking to the left here, using the daily as an example. We've used this for a while, bursting out of that channel at 80. So momentum has taken that lower And down we go with the stochastics. If we look at a different setup, we look at the MACD setup, you'll see the move to the downside as well on the MACD there. That's the 10-minute time frame, but look at the daily as the channel. Monster move here, big old cross last week of down we go. Parabolic SAR, MACD's moving lower. Our signal and MACD line lows of negative 0.0035. These lows we got to here on this technical indicator 17th of September. 29th of December, we had that big sell-off on the stock markets and on gold, sorry. And then, so there's still legs on that one, isn't there? You can clearly see that to the downside. The gap will be filled at some point, but a move lower for the dollar. Again, Swiss franc in demand because of the weakness of the yen. And indeed, if we look at Swissy yen, it's our biggest mover so far today. Swissy yen, I won't talk about very much, but tend to cancel each other out. But huge mover today to the downside. That's the hourly chart here on this setup. That's Friday's hiatus, Friday's open, Friday's close on the for the yen, and then we've moved lower again. But interestingly here, the parabolic SAR here on the hourly chart from Friday's open to mid to lunchtime on Monday is now flipped to the upside. We got a bit of a cross. So this might be saying that this floor might be over. We might see that on a few of the others here for dollar yen, but certainly our biggest mover so far today has been the Swissy yen. Let's just go back to our mean reverting strategy. Now, Bollinger Bands. Let's go back to the euro, see how it's reacted to the euro USD, to the durable goods data. Obviously not going to give up much of the move higher, or is it? There, it's moved back down again. Dollar's picked up a bit since the data dropped 5 minutes ago, but not anything significantly, is it? The gap on, go to the hourly chart again, the gap on open is still very much to be filled as Friday's closing trades. There's our opening trades this morning. So will that gap get closed? That's what you're looking for. You're looking for, so let's move that line up there and see where we are. 118.25, and the lowest we've got so far is 118.37. So there's a 10-pip gap still to be closed on that move higher on this intraday basis. If we look at the daily basis, though, that's a big old move, and that's a leg high. This could be the end of the buying, but as we got to 119, again, it's just a stall for today. I would argue the trend remains very set, as you can see there on the daily time frame from that burst through 116 the end of last week. So the week before last, I should say. So off we go. Big week ahead of us, as I shared on Discord this morning, or yesterday, I think it was, wasn't it? We just use this as an example. Where was I? It was up here somewhere, wasn't it? You can see that. So Monday today, obviously the durable goods later, we got out that IFO weaker in Germany, still lifted euro. Trump is out in Iowa on one of his tours. They said last week they were going to get him out, get him back to his people, get him on the stump, thing he does best. Speaking to his MAGA core. He's in Iowa talking about the economy. I mean, just listing its developments, no doubt. But he's due to speak tomorrow night. And before that, we got the Consumer Board, consumer confidence. Remember, consumer confidence has been key to maintaining this move in the stock markets in the US in particular. So that's held up really well. So we'll watch that tomorrow. Wednesday is the day of the week. I'm sure you're all aware. We got the Bank of Canada with their rate announcement, as I've written here. No change from both, but the statements and press conferences will be finally dissected. Indeed, they will. After the market close here in Europe, 7 o'clock GMT, 1900 hours GMT, the FOMC have their rate announcement. Again, no change in rates from the FOMC or the Bank of Canada this week for January. Next meeting in March, both of them. But see what that looks like. Obviously, the press conference will be key for Jay Powell under threat of prosecution from the Department of Justice, a member of the cabinet, Lisa Cook, facing more scrutiny from the president, but again, the justices of the Supreme Court pushing back on that. And then also on Wednesday, not to be overlooked, two of the Mega 7, Microsoft and Meta, report earnings. We've also got IBM and the ASML in chipmaker in Europe reporting earlier on in the day, and Tesla also after the market closes. So that's after 9 o'clock GMT. We start to get those results from Tesla, Microsoft, and Meta on Wednesday. Thursday is the darling, or once was the darling of the stock markets before Nvidia came and took its crown, is Apple. We've also got the Visa and MasterCard reporting, along with Caterpillar. Caterpillar's key because it's seen as a bellwether for the Dow and industrial stocks. And in Europe, again, we got SAP, the German software company. Friday sees the oil companies Chevron and Exxon, also American Express and Verizon, the big telecoms company, and PPI data, delayed PPI data, also earlier on Friday. But that's what's to come this week. And also, obviously, it's the end of the month, it's the end of the week, so we've got that coinciding as well. So a wrapping up of trading accounts for January. I've had a terrible week last week. I lost 1,000 points, 10, 90, 40. I'll post all this up on our trade chat. That was all to do with big loss on Monday on the Dow on 386, 300 points on the Nasdaq. Was it Nikkei? It wasn't it? The wrong side of the Nikkei, and another Dow loss of 568. So we recovered in the forex markets, but there you go. Points wise, percentage wise, it was still a bad week. But from a points point of view, I scrolled back. It's the worst week I've had points wise in 72 weeks. So a year and a half, nearly, on about a year and a half, 18 months wise. I count all the weeks. Certainly, we were positive not every week, but most weeks was 2025. But worst week. And it's only week 3 of January, so let's hope that's behind us. But as I say to you all, you don't trade in hope, you trade in probabilities and possibilities, principally probabilities. Manage that risk at all times, guys, and you live to fight another day. Always be my mantra, and I don't think that'll change as long as I'm trading the market. So there we go. Right, let's get to the key news, which I'm sure you've all noticed this morning. The mighty yellow stuff is over $5,000 this morning. New all-time highs yet again. I seem to be doing this on a daily basis, don't we? $5,112 we got to this morning. It is relentless, isn't it? Be very careful trying to fight this trend. Our initial target looked, quite hefty at 4,700 when we had this sell-off on the 29th of December. But recovered nicely. Big breakthrough was that candle there on the 12th of January. Consolidated for a few days thereafter, and then we've just taken off and rallied from the 19th upwards. Geopolitical concerns remain high on the list. There's restructuring of many economies. The weakness of the emerging market economy still, even though it gets talked about at the beginning of every year, we're still not really seeing a sign of that. The de-dollarization story adds to the momentum in gold. Potentially it is building. It is perhaps getting a bit of legs. But $5,000. To be honest, I never thought I'd see the day where gold was trading, exchanging hands at $5,000 an ounce. If you've got lots of gold jewelry, perhaps now's the time to be digging it up. Simply because I say that simply because 5 it's one of those numbers that we as human beings find quite psychological. 0s and 5s, always you'll see, if you look at charts, or I looked at charts as long as I've been looking at charts, you see it coming up time and time again as areas of resistance, areas of support. You see it on an intraday basis as well as on a monthly charts. But $5,000, hugely psychological. The daily candle remains very green, but we've rolled over a tad, but not much this morning, and we still remain over $5,000, $5,070 at the moment. So that is, be careful trying to short this. in these higher time frames. Obviously, if you're trading on a intraday basis, that's very different. Just have a system, whether it's a price action system, an old technical analysis system, or you're using volume, whatever it is. Make sure you understand your risk levels and manage your risk accordingly, my friends. But new all-time highs today, $5,112 for gold and silver, even more parabolic. We broke $100 on Friday, and off we gone, heading for 110. So there's no holding back these commodity current markets. Remember that phrase we used a few weeks ago, digital consumes physical, meaning that, this massive expansion we're seeing in these data centers, these power requirements, particularly in the United States, requires lots of hard minerals, gold and silver being a great example of that. Copper in particular as well, obviously for the cables in the electricity supply. And then we've got the safe haven bid on the precious metals as well because of the continuing geopolitical unrest. And really, I would argue that it's the instability of the policies coming out of Trump. His the way he flips from one thing to another. His comments, across all sorts of markets and opinion ranges can influence markets. Whether it's overtly political or overtly not, he has moved things, so it makes sentiment unstable. Markets hate uncertainty, so the uncertainty is high. We've still got uncertainty over Russia and Ukraine. Looks like the Russians have pushed back again. Putin's clearly in no rush to settle. The situation in Gaza and Israel continues to roll on. The Iranian situation is a big unknown. How is China going to react? This movement, this global movement by the US around Taiwan and the vulnerability of Taiwan to the chip manufacturers. So this massive rally we've seen in the commodity markets could explode negatively quite quickly as well. So don't get too greedy. Don't just keep buying and buying. Always watch your risk. This is quite a parabolic move we've had again in the last few weeks. We saw the blowout after this one here, 21st of October, and that was a comment from Trump himself. We saw on the 21st and again on the 10th when he threatened. Where was the 10th? When he threatened. It's the 10th here. 10th here. Here when we went through $4,000 when he threw his toys out the cot about the Nobel Peace Prize, and then that big end of year correction we saw on the 29th, but that's been bought out. We've rallied and rallied and rallied, so it could do with a bit of a cooling. We're taking those 2 days out there, the 15th and the 16th of January. We've had a rally here right back from the 5th of January. Look at those daily candles, very, very small red candles, very few, 1, 2, 3, 4 out of all these days of trading, and some big bodied positive candles. So we've had the 3 white soldiers there on technical analysis there because they're similar size. You wouldn't count that one. And then we follow through with 2 further days today. We've got to the 5,000 level, so you've certainly seen some profit taking at that level. But Trump's speech last week in Davos, has only lifted the gold price. Lifted. He hasn't stabilized geopolitical situation. The so-called president of peace and his 8 or 7 wars he thinks he's resolved on all of them. Are really resolved. Certainly the Israel, Iran, Hezbollah, India, Pakistan, Taiwan, Cambodia. They're all far from settled, and he includes Kosovo and Serbia, I think, in his wars that he's fixed. That was going all the way back to his first term. But anyway, gold remains big, silver remains big. Be careful trying to short this at these levels, but certainly you would expect some profit taken as we've got to $5,000. You'd again, just going back to the silver market, you would have thought a bit of profit taken at $100. It hasn't happened yet, and we gapped on open again on the uncertainty as we've moved higher. So $110. Next line in the sand, we're 109.35 for silver today. Similar with, I can't show you these, but similar moves in palladium, platinum,
and copper markets as well. Oil continues to move down today. Had a good day on Friday. Big out of body move on Friday through $60. Key move. Looked like we were going to continue higher. Many would have looked to take this to 62 from Friday's close. We're actually down again today. We have gone to 61.75, but 62 is the next line in the sand for WTI to the upside, and it's 68 to the upside for Brent. So good day on Friday. Can we hold it this week going forward? Obviously, there's been the big demand for gasoline and heating oil with this big cold snap in this big storm that's hitting the northeast, and quite an extensive, it's huge thing that's hitting northeast the United States. That will obviously pile over to Europe later on this week, and we are expecting colder weather and another storm, or the tail end of that storm here in the UK and Western France this week as well. So oil still in the upper half of the Bollinger Band and pushing its highest close on Friday since the beginning of November. You see that there. This is WTI. Yeah, so a close on Friday. So it's a 61.40 highest close we've been since beginning of November, end of October. But again, you can see that's our key resistance area here. These 3 days here where we went just over 62. So 62 to the upside for WTI. We talked about this on Friday, didn't we? And similar sort of cluster here for Brent at 66.70. So 67 is the upside target for this move high if it's going to be maintained for Brent. But yeah, a bit of certainly upside volatility for energies on Friday. Crypto, Billy Bitcoin continues to unwind. We were under 86 at one point yesterday. Down here. Did we get under 86? We didn't get under 86. We got under 87. We're just back over 87 now. So that move lower is now back in place from the failed break over 95 from the week before last, the 14th and the 15th of January. Finally gave it up on the 19th, and then that big move down we saw on the 20th last week as we went back under the 20-day moving average in a big down day. Trump held us, but we're now lower again on Friday. And so the next level support, the level we were talking about before, clearly buys at 85. So we perhaps need to get there again. And will we get to this intraday low from the 21st of November, $80 and then $75? So 85, 80 and 75 downside targets if this continues to unwind. If 85 holds, we could have another go, 92, 95. But we overall generally still remain channel bound, still stuck. Can't break away from that 92, 95 range. 92 being my key tipping point. We went long, we got closed out, absolutely flat trade that. But yeah, the longer this goes on, remember, sideways, the bigger the move can be. Whether it's to the upside and 100,000 plus 112,000, then the all-time high 125,000, or breaking below 75,000 and potentially lower. So just keep watching Bitcoin. It's not trending, sideways, compression. May need some stories about regulation or something, but we'll see. Evidence of perhaps the move, getting a bit overextended here on the daily time frame. See the stochastics moving into an overbought area. Oversold area, I should say. I was getting those two mixed up for some reason. But a little bit of a bounce today. So 90,000, 92, 95 to the upside this week for Bitcoin. If there's no questions, guys, I'm going to wrap this up. I've got lots to do today, so I'm going to shoot off and get everything in place. Busy week. Wednesday, we're going to be live for both the Bank of Canada and the FOMC on Wednesday. So 2 webinars there tomorrow. Bring on. Tomorrow we'll be live for the. Let's bring the calendar in. Tomorrow is the Consumer Board, 3 o'clock. Trump must be speaking early. Must be speaking late on Tuesday. So I thought it was Monday, Tuesday night. It's late on Tuesday. Aussie obviously we saw that massive run, but we got inflation data as that cooled as well. It's expected to tick up a tad overnight, Tuesday into Wednesday, and then say Bank Canada, Fed, and Thursday claims as normal. So we rely for that, and then the PPI on Friday. So to wrap up the month, so lots going on. I say obviously earnings in full tilt. The tech companies reporting, as we said, Microsoft and Meta this week on Wednesday, and Apple on Thursday. So take care, everyone. Stay safe. Some big news this morning. If you've been following our, which I hope you have, our Discord group. Where's Discord gone? There's a bit of an announcement here. Everybody's been asking for it, so we've got it going. Is it here, the announcements? Perhaps it isn't. Something big is coming. Hope you can see all this. Something big is coming. Our own fully licensed MT5 is almost there. We hope to have it out very, very soon. Keep watching, keep listening. We will let you know. We can see multiple charts all at once. But I love MT5. It's stable. It's been around for a long time. So have a look. So as you say, click the link. You get a 30% discount on our our MT5 account when it comes. You're going to have to open a new account, as it says here. No migrations to MT5 will commence only for a new account purchases. So new accounts, 30% off for MT5. It's imminent. I'm going to take a little thank you on that as well. So keep watching, guys. Keep on Discord. Follow us on Discord. Follow us on our social media channels, X and YouTube, which is what we're talking on now. And stay safe, and I will see you all very shortly. Take care. All the best. Bye-bye.